As we come closer to the end of this year, we can't help but think what is really going to happen with the US economy and the US index as well as stocks in 2020. Well, the truth is that there is renewed hopes now for a Brexit deal, and there's been a truce at least on a temporary occasion between the US and China trade dispute, which makes us think whether the US equities are going to continue higher. Now, if we add on to that the fact that the Fed cut 3 times in the year, then it's looking most likely that equities are going to move higher. The question is, where are they going to start falling? And to my opinion, this is going to be when the US yields are going to become more attractive, right? At the time being, the US yields are before the 2% at 1.9 or so, 10-year yields. We're going to see the chart in a minute, which means, in my opinion, that in the early 2020, we might see both the US dollar and also the US equities moving up hand to hand. And that's not only because the US economy remains the strongest globally, but also because economic indicators keep improving. And this is expected to be the case, of course, when you have interest rates falling, okay? And of course, when you have the employment situation in the US improving. Now, if we look at the US index, this is where I want to start the day today. If we look at the US index, it still moves exactly as we expected, right? So we talked about this, the end of this ending triangle up here, and we talked about this break, okay, and we completed most likely wave 1 down here, or maybe we still have a lot of a bit room to the downside to be honest, to complete wave 1. But I really see this correction now as quite impulsive, right? Which makes me think, are we going to see an ABC that is going to take us anywhere between the 50 and 61.8 extension of this move to the downside and then continue lower? Or did we have another ABC over here and then we are going to turn higher? Okay, so this question, of course, cannot be answered right now. What I see in this chart is that both the RSI and MACD support a further move to the upside. Okay, we're still far from reaching that level over here, and prices are still on the RSI showing that momentum can still move to the upside, right? Which seems to me to be a case where 1, 2, 3, 4, and 5, and then ABC, and then 1, 2, 3, 4, 5, to end anywhere between the 50 and 61 extension and move lower. And around, of course, that area is where we will be able to receive further clues from the MACD and RSI. Or we've had our A, B, and C, yes, ending down here, and we turned to the upside. Now, with that being said, I don't see the index and the equities, okay, moving opposite to the opposite directions, okay? At least we've seen that the S&P is moving higher, along with the Dow Jones, of course, and the Nasdaq. We talked about this the week before. I'll still see this as an ABC, okay? And I've actually drawn these 61.8 extensions of A and B, and then of 3 and 4, right? And they both actually lean towards the 3250 level. And this is exactly where I believe prices will start seeing at least a small correction. Okay, now the question is, are we going to get an extended 5? Because if that's the case, when we're looking to move even higher, okay? We're probably looking at 1, 2, 3, 4, and then 5. That can take us up to 3,500 and then start looking for the correction. This move would coincide, okay, with my view pretty much to for the equities to move higher, because interest rates are still do move to the downside in the US. The economy is improving, and of course we have the US and China trade truce, at least resolution for the near at least future. Brexit uncertainty is being removed slowly, discounted, right? And the US economy is improving, which supports the business. So what else can we actually see to really, create an opinion that is against the equities moving higher? Now, the question is, where do we expect the equities to start reversing to the downside? The big sell-off. Well, I believe we're going to see the US yields being more attractive for that, okay? Now, for these 1, 2, 3, 4, 5, we ended down here. So I see this as a flat correction, okay? As a W, X, and Y, okay? So when we have a flat pattern, we have an ABC, ABC, and then 1, 2, 3, 4, and 5, okay? We all know that. If we don't, then you might as well just note it down. Now, with that being said, right, we've had the first two parts completing already. So we've had the first ABC, second ABC with 95% retracement to waves A, B, and C, okay, which is W up here. And now we're moving up. And how we're going to move up? Well, I think we have a leading triangle here. 1, 2, 3, 4, and 5. This is going to complete the first wave. We are probably going to see a short correction. And the moment then, probably in wave 3, we reach the 2.5 or so, okay, in yields, then we're going to see the sell-off in the US equities. Anywhere between 2.5 and 3, that would make the US yields very attractive, okay, which means, well, a shift in asset selection, let's just call it. So anywhere between here, I would expect the SPX to start moving lower, along with the rest of the equity indexes, of course, okay? That is most likely going to push then prices higher again, yeah? And we're going to see that ending around the 3.2330, or maybe a little bit higher, or maybe a little bit lower. And then we can start, of course, here receiving further clues. So, of course, this is a long time ahead, okay? We're talking about months, potentially in 2020. But until then, of course, we must hold our breath and see how the US economy is performing, how the elections are affecting currencies and, in general, assets, okay, because we also have the elections, the impeachment inquiry, of course, the vote, actually, or the court, let's just say, US, China, and Brexit, which are still remaining being the highlights for 2020.